Hey folks, welcome to What's the Dilly-o, the podcast where we get real with the people building fintech tools that actually work. I'm Kanishka, and today we're diving into a space that's usually buried in spreadsheets and manual workflows, counterparty risk. So let's get into it. Welcome. Who are you, and what is counterpartied in one sentence?
Hey, Kanishka. Thanks for having me on. I'm Russell Fischer. My day job is managing risk at a fintech that lends in Mexico to Mexican consumers. But my night job is working on Counterpartied, which is basically a tool for allowing people to access regulatory bank data in English rather than kind of like using the 25-year-old government website.
All right. I love a good side hustle. Tell me more. Tell me how you kind of came up with this idea.
Sure. So I'm kind of someone who has had many side projects that have not been finished. Uh, and and so I had been working on some stuff and it was not going the way I wanted it to. And I just um decided I needed to do like get something shipped. And kind of like pivot what I was working on to make something more simple. And right around that time, I saw a LinkedIn post from Jonathan Awad from Base
Hmm.
Layer.
Yeah,
Uh,
absolutely.
yeah, yeah, yeah. And it was like, post your funniest risk memes. And if you get the most likes, then you'll win $10,000 of like LLM API credit. And I was like, this is my chance. So I posted some like not very funny risk memes on his thread and I got the most likes. And so I won the credit. But what I did not know was that like so you had to like go to this event to claim the credit.
Yeah.
I assumed it was in New York. When I like won the credit, I found out that it was actually in Las Vegas.
Yes.
Yeah, this was the it was after the what's that big the big event in Las
Fintech
Vegas,
meetup.
FinTech Meetup, right? So this is
Yeah.
the one in
Okay.
March.
Yeah.
And so this was like a few days later, and so I decided that I refused to accept a less than 20x return on investment.
Fair enough.
And so I would not spend more than $500 on the entire trip to claim this API credit.
Okay.
So I got like a 300 something dollar ticket. I flew over there like a red eye flight. I slept like 3 hours in the Las Vegas airport, and because I wouldn't pay for a hotel. And paid for like Ubers, to and from the hotel to the event, claimed the credit, and I flew home. So I got the credit, and then a few days later, I like I said, this is my side projects were kind of like not really working out too well. So it just came to a head, and it was like 8:30 at night or something, and I told my wife like I am going to launch something. Like there will be a website with some version of this thing I am working on like tonight.
Okay.
Like and I posted that on LinkedIn. And this is when I did not really know what it was going to be or like how it was going to work. Um, but what I did know is that the so my first job was at American Express, and at one point I was focused on underwriting financial institutions, and that's where I learned that you can get like the U.S. government makes tons of data public about banks.
Mhm.
Um, And so even if a bank is not publicly traded, you can get their financials. You can get tons of information about them. And so I figured, well, that website is like kind of, it's like definitely efficient, like it works, but it's a bit clunky and it would be cool to like apply this new LLM technology to it, right? And so I like basically live posted throughout the night as I like got the first version of it working. I
Yeah.
like downloaded some of the like this like call report data and I wired it up to an LLM and um using some of this credit I'd gotten from Base Layer from Jonathan
Yeah.
and got it working. It was like more than half the time would not like respond with the correct bank's information and like it had like three metrics it was responding with, it was like not good at all, but it was something and it was live.
Hmm.
And then since then, I've just been like working basically every night, either like building it or marketing it. And now, uh, I just checked the other day, we've got like 300 million rows of data on the back end, moved from just like a simple LLM to like an agent architecture where there's like an orchestration agent and there's an agent deciding which tables to like send as context back to the orchestration agent. Um, and just like keep adding data and making it more useful. So yeah.
Very cool. What makes this so fun for you?
I think like just making something that people actually use. Like there's a lot of like it's the kind of like bank data community is like kind of it's like very analytical, and they're just interested in more ways of like accessing the data. And so like I don't know, people have really enjoyed using it, using the service, and it kind of exploring it. Right now, the data, like it can be pretty hard to know what you're looking at on like FFIEC website, the bank data. Like some figures will be like year to date, some will be like just a quarter, some will be annualized, and it'll like won't always tell you. Um, and generally they like what the FFIEC has done is they've like taken the bank call report data and then they've like done some transformations on the data, and like some of these transformations feel kind of arbitrary. I don't know. Have you like ever used the call report data for anything?
I have not, so
Yeah.
you tell me more.
Yeah. I mean, like it serves its purpose. It's nice. Like they've standardized. So the FFIEC is like a group of kind of like bank regulatory bodies come together to like standardize this bank call report data. And the banks have to report this data every quarter,
Mhm.
at least. So anyway, they've done this, and from what I can tell, like the website hasn't probably been updated since like 1998 or something.
Mhm.
Um, that's like a 3D stacked bar chart type data viz going on. Um, and so anyway, yeah, it's just like breathing new life into data that I think like more people should have access to.
Fair enough. Who's using this data on a regular basis today? I know you said that you used some of it or all of it at Amex. Like for what purpose? Like
Hmm.
why are you
Hmm.
underwriting these banks?
Yeah, so I mean, I started with this data just because it's publicly available, right? I don't have to like go and scrape, like non-uniform P&L and L and balance sheets on random general corporates. It's already been standardized, so that's nice. Um, but like all types of companies have exposure to banks, right? Like, if you maybe like are carrying cash above FDIC limits, at a bank, or and obviously like there's a lot of banks are now getting smart and finding like fintechs finding ways to move it around at different banks, all this stuff. But still, like everyone has exposure to banks, and especially financial institutions have exposure to other financial institutions. And so the idea was just to kind of surface them this data, and this is kind of like the first version of the product. I have definitely like more plans to do more interesting things with this data.
Okay, all right. Give me an example of a question that someone would ask counterparty.com and you know what's like the output that they're getting there?
Sure. Um, I mean, I could show you. Can I share my screen on
Yeah,
this?
I think so.
Okay, so we got some like classic terminal vibes going on here.
Hmm.
And you could ask it like, I don't know, which 10 banks have the most, or like had the highest net charge-off ratio on their commercial, which 10 banks had like the highest net charge-off ratio on their commercial
Hmm.
industrial loan portfolio. This is going to take a minute. I think like speed is a function of money with these
Yeah.
things, so it does take a minute, but
who's asking this question? Like, if you're cosplaying as
Oh,
someone in the
yes.
industry, like who's
Yes,
asking?
sure. Sure. So, people at banks who want to like benchmark their own bank's performance against other banks, especially like more community banks. Um, People selling to banks, like you're trying to maybe figure out what their budget looks like. Um, okay, so it just answered using the basically call report data, UBPR data, and it's answered with these 10 banks. So I have never heard of, for example, Bank of Estes Park. I mean, I've never heard of that. So let's say, can you tell me more about Bank of Estes Park? And then we just keep going. So give this a second. So yeah, people selling to banks, people who work at banks, people who work at credit unions who want to understand how they're like maybe what's going on in banks, people who are at fintechs, maybe evaluating like a partner program. I've had like yeah executives from banks come in and ask questions. Yeah, a lot of different people.
Very cool. I think when we were talking offline, you said that this is more than just a search interface, right? You're basically trying to become a stepping stone to smarter credit decisions, right? So walk me through that.
Yes, yes. Okay, so wait, it looks like the answer came back.
Yeah.
So now it's like telling you about the Bank of Estes Park, which I didn't know anything about. Pretty small bank, 150 million. But yeah, it's just like summarizing a lot of these, and you can just keep going. You keep asking more and more questions about what's going on with this bank. So that's basically how that works. Yeah, sure. So right now it's just like kind of a toy, right? It's like
Hmm.
I do think that people like as it gets more and more powerful, like add like different modules to make it actually like to be able for people to be able to incorporate this into their workflow. But I think that it has the potential to be a whole lot more. Like I've spent years automating business underwriting decisions,
Hmm.
and I think that there's a lot that can be done there, especially within the context of like rating financial institutions and rating like debt issued by financial institutions. To use some numbers, there's 4,500 banks in the US. If you have this is maybe an arbitrary number, but let's say you have more than 10 billion in assets, it's not really like very hard for you to raise capital, probably. If
Hmm.
you're less than 10 billion, which by the way is like 96.5% of banks are
Hmm.
below 10 billion. There's like 158 banks above 10 billion, and they control like 21 trillion of the 24 trillion in total assets among all banks. So if you're one of these like smaller banks, especially if you're one of the banks like below a billion in assets, which is like 77% of banks, it can be harder for you to like issue smaller amounts of debt. Like all businesses have three ways to raise capital, right? You can like from operations, you can get investment for your equity, you can raise debt financing. Banks are the
Hmm.
same, but then they have one more way, which is through deposits, which
Hmm.
generally makes up like the majority of bank funding. But when you run out of deposits, when you run out of equity, or you don't want to sell more of the company, and you just like don't have more profit on hand to reinvest, you need more debt, just like other
Hmm.
businesses. And if you're small, it's not always very easy. Let's say you want to issue like $50 million of debt. It can cost like to get a rating on your debt and on the issuer. It can easily cost you like an executive salary.
Hmm.
It can cost like several $100,000. For very big issuances, it can be more than $1 million. But like I think the very least you're going to pay is something like 10 basis points on par of the
Hmm.
issuance. So like if you're issuing 50 million, I think the least you're going to pay is like 50K. And I think with like agents, we'll be able to take all this data we have, take the benchmarking data, take some more data from the company, and like really bring down the cost of debt issuance, especially for these like smaller banks.
So would it be fair to say that Counterpartied is on its way to becoming a CRA?
Yes,
That
yes,
that's the dream.
yeah, an agent-based CRA, like these, like Moody's, S&P, these guys. are huge, billions of dollars
Mhm.
change hands, and I think that it could be done. I think we can bring down, like, create a new market by like kind of bringing down the bar for like who can issue debt. I mean, like getting your debt rated is not the only rate limiting factor for small banks issuing debt, but it
Mhm.
is like part of the equation, and I think we could be part of the solution there for sure.
Yeah, because you're reducing costs and removing a hurdle where there
We
doesn't
do it way
necessarily
cheaper.
need to be. Yeah,
Like, like if the cheapest right now is 10 basis points on par, like why couldn't it be three or less? You know, like it could be a lot less, I think.
right. And if I'm understanding the business model, and I'm sure like there this is just a North Star for you right now, is it the banks that would be paying you for this rating, or like who's?
Yeah. Yeah, today that's how the model works. Out there, right? If you're trying to get your own debt rated, you pay for it. Uh, but I mean, you can imagine what like the scale that like agents can work. We could feasibly like do a cursory rating on every single financial institution and just like make it public. And like they're not going to issue debt on that, but like if we can start building a reputation as like a trusted source, start applying some of like the modeling, strategies used, for example, like at fintechs and at larger banks, and like I think we could get pretty sophisticated and start small, and then eventually go like deeper and make a pretty like robust rating for these banks at like a fraction of the price.
Hey, I think that's a great kind of overview of what you're building. I'm always curious about what's in the future, so I'm gonna ask my kind of signature question. What's the dealio with Counterpartied in the rest of 2025?
Um, I think getting some version of a credit assessment for all banks out there. Um, there's always more public data also to add here. Like I said, we're at 300 million rows. That's like only 5 quarters of data and maybe like 60% of the like official data transformations on call report data that the government has released. Uh, and we could do I could do many more transformations that are like less kind of random and hopefully more useful.
Mhm.
We just added in like relationships data, so you can like query who the topmost parent is. The more use it gets more and more useful the more data we add. So one, we'll keep adding data. Two, issuing some type of credit assessment on all the banks in our data set.
Got it. Fair enough. And if you're kind of shouting out to your ideal customer, who is it? And then what's your pitch to them?
Yeah, I think our ideal customers right now are banks themselves, people at banks who want to benchmark their own performance, who want to learn about competitors. And I would just love to have people who work at banks use the product and tell me how to make it better. So that way, like one day we can, be the partner of choice for anyone issuing debt, and I'm getting a rating on that debt.
Fair enough. Um, Thank you so much for taking the time today. I really appreciate the walkthrough. I think it took me a couple of times of you explaining this for me to get it in from my like very narrow view of fintech, but this definitely makes a ton of sense, and I wish you all the luck.
Thank you so much. See you, Kanishka.
Yeah.